Good morning, our dear listeners. Welcome to PwC Nigeria's podcast called Let's Talk Energy, where we discuss energy topics across the world. Today, we'll be discussing the emerging downstream sector and the looming suspension of the PIA. The downstream sector is one of the three major sectors of the oil and gas industry, which embodies the refining of petroleum crude oil and the processing and purifying of raw natural gas, as well as the marketing and distribution of products derived from crude oil and natural gas. The downstream sector reaches consumers through products such as gasoline, petrol, kerosene, jet fuel, diesel oil, lubricant, waxes, natural gas, and LPG. The downstream process can be thought of as the steps closest to the consumer, who is ultimately using the oil to fill up their cars, power their engines, power their generators, and use it in their daily life. In 2021, the Nigerian president, Muhammadu Buhari, signed the Petroleum Industry Act into law, bringing to a close a 20-year effort by the country to reform the Nigerian oil and gas sector. The major objective of this action was to create an enabling environment conducive for growth for the sector and also address some legitimate grievances around communities most impacted by the extractive industry. These reforms included, amongst others, a new regulatory authority, which is the Nigerian Midstream and Downstream Petroleum Regulatory Authority. And this new authority consists of the defunct PPRA, which is the Petroleum Product Pricing Regulatory Agency, the agency that basically used to determine the price of PMS, and the defunct Petroleum Equalization Fund Management Board, and some elements of the defunct Department of Petroleum Resources. The Act also transforms the NNPC, right, setting up an NNPC Limited, which will be commercially driven, and saddled the responsibility also to deregulate PMS, amongst others, petroleum products. I'm here today with Moshood Olajide to discuss this important topic. Moshood Olajide is an executive director responsible for finance and business support at Ardova Plc. Ardova Plc is a Nigerian leading indigenous and integrated energy company involved in the distribution of petroleum products. Ardova Plc and its subsidiaries have over 550 retail outlets across the country, as well as other significant downstream assets. Prior to joining Ardova Plc, Moshood was a partner at PricewaterhouseCoopers, and he was previously my boss, and was responsible for the financial reporting, regulatory services, statutory audits, infrastructure deals, mining deals, structuring, general tax advisory, compliance, client training, and a whole lot of others. Very early in his career and prior to joining PwC, he was at Aluko and Oyebode, a foremost Nigerian law firm where he had the responsibilities for general legal advisory, company secretariat, negotiation of commercial contracts, litigation, and arbitration. From an education and certificate standpoint, Moshood holds an LLB from Obafemi Awolowo University, an LLM degree from Columbia Law School. He is also a member of the Association of Chartered Certified Accountants, ACCA, with the Nigerian Bar Association, the New York County Law Association, and finally, but not the least, the Chartered Institute of Taxation of Nigeria. Welcome, Moshood.
Thank you very much, Babatunde. Good to see you again.
I'm Babatunde Olaniyi. I'm a senior manager in the tax and regulatory units in PwC, and I'm part of the core PwC team supporting clients in the private and public sector navigate the post-PIA era. So, Moshood, let's get right into it. Looking at the downstream sector, what are your thoughts around the value chain and the workings around what the major players are doing in that sphere today?
Thanks, Babatunde. And like I said, it's very, very nice to be here. I feel back at home at PwC.
You're welcome.
So for context, right, and I think you kind of described it earlier on, the downstream sector in Nigeria largely consists of inland storage. I mean, we like to put refinery in that bucket, but there's really not significant number of refinery, at least not in the order of consumption that we have in Nigeria. So yes, maybe we can put refinery there, but the biggest chunk of downstream starts from inland storage of refined products. downstream transportation, that's inland transportation, basically trucking of the product, and the retail of this product. And so I'm talking about filling stations, gas stations, and things like that. And the major products are petrol. We call it PMS because it just sounds more fancy than petrol. Diesel, we call it AGO, that's automotive gas oil. DPK, which is kerosene. ATK, which is aviation fuel. Bitumen, LPG, some level of CNG, and some other products in that line. But these products I've listed at the major component of the products that exist within the downstream space in Nigeria. Now, what you see in the space is that different players like different components of this space. So some players are just in storage. So you have downstream players that are just in storage. You have downstream players that are in transportation. For whatever is worth, despite the nature of the roads in Nigeria, the downstream transport assets are actually the largest transport assets within the space. Maybe the only bigger transport asset will be the cement transport asset. So you have the transportation and then you have the retail outlets. Based on some surveys that have been done in the past, we have close to 30,000 retail outlets in the country. So you have some players who are just owners or operators of retail outlets. They don't have any transport infrastructure. Nigeria has about 30,000 retail outlets, and you have some players in the downstream space who are just in that retail space. So basically they own or operate retail outlets. So again, just to summarize, you have some players who are just depot owners, storage owners, transporters who are just truck owners, to put it very bluntly. And you have some who are just retail station owners or operators. But the bigger players within the space have some level of integration. So you would find most of the very, very big players having interest across that value chain. So having some interest in storage, having some interest in transportation, and having retail outlets. And the reason is that the value, the commercial value within the downstream space spans through all of these buckets. So the more of the buckets that you can take, the more value you can retain commercially as a business. So that's how I would say the space is structured.
Yeah, thank you very much, Moshood, for that response. And I think I'm just curious, right? Because if I look at the business models that you just highlighted to us, right? I think that is largely driven on importation of these products, right? And I know that one of the major objectives of the PIA and the recent actions of the government is basically to kind of domesticate the refining capacity, right? So how are companies, the major players in that space, trying to adapt and put that within their strategy going forward?
I think that's a very, very good question. From my perspective, right, and from I would say the little I know of this space, even though that's what I do on a daily basis, no matter what happens from a refining capacity, you will still need storage space, because you cannot expect that you will truck out your daily consumption from any refining location every day. So there will still have to be some level of storage, right? And so storage will still exist, transportation will still exist. And to the extent that cars are not going to drive to refineries to get fuel, there will still be retail outlets. So whichever way this goes, there will still be significant need for storage space. For energy security, Nigeria aims to have a 30-day consumption in storage. So that means that even if there is a refining capacity, Nigeria still would like to have 30 days consumption in storage, so that if the refining capacity goes down, or if there's any problem whatsoever with the refining capacity, there is fuel to be provided to consumers within that space. So I think that what will change significantly if refining capacity increases significantly within our space is that you will find players focusing more on the local components of our value chain and moving away from importing a lot of the product. I think that's still way in the future, because I don't see any refining capacity coming on board in any shape or form that will completely eliminate importation. It will significantly reduce it, but it's not going to eliminate importation of petroleum products.
That's great, Moshood, and thank you for that. And I think one of the points that you mentioned around the 30,000
retail outlets,
retail outlets, and also the storage capacity that government tries to keep, that kind of brings my mind to think about what recently happened, right, in that space, right, and how that is connected to every individual, right? Including myself. I've been running Gen now for 24/7 for the past 1 week, right? So extending that, can you just let us know what are the perennial challenges that companies within that space are facing, and what makes you not sleep well at night as an executive director of a major player?
So just to make sure that we're not mixing oranges with apples, right? The reason why you're using generator in your house is slightly different from the perennial problem within the downstream space. Now, what has happened in the last 1 week is that I think there's been 2 instances of system collapse, right? So our infrastructure to deliver electricity has collapsed, I think, once or twice in the last 1 or 2 weeks. So that has meant that people have had to use the generators more. Now, that is coming, unfortunately, at a time when there's a significant increase in the price of crude oil, and obviously the consequence, a significant increase in the price of refined products. So AGO, which people use mostly to power heavy equipment like generators. So what has happened, right, is that people are buying AGO at a very, very high price. I think the price has doubled in the last 1 month.
3 weeks or something.
So I don't want to give prices here so that it doesn't feel like ours is the cheapest.
But getting free marketing.
Yeah. So I mean, the price has almost doubled in the last 1 or 2 months. So imagine you having to pay double for diesel and then not having grid power at all. So you're going to feel it more. So that's what has happened in the last 1 or 2 weeks. But now to go back to your primary question, which is about the perennial challenges within this space. For me, I think the most critical challenge within this space is infrastructure. Right, the storage infrastructure. So most of the storage infrastructure that exists within the space, I dare to say about 50% of it are probably over 30 years old.
Wow.
And transport infrastructure, they are, I don't have the data, so I hesitate to make very, very clear statement about it. But I mean, you can just stand on Lagos-Ibadan Expressway and watch the tankers going in and out and just evaluate for yourself what you think are the conditions of those trucks. They are in very, very bad shape. I don't think that there has been a deliberate effort to renew the transport infrastructure within that space in any recent past. So you have dilapidated storage infrastructure, you have dilapidated transport infrastructure, and you have mostly dilapidated retail infrastructure. So all of that obviously affect efficiency. They affect the ability to have a seamless operation within that space. So one of the things that happened maybe earlier this year was that there was the incident of contaminated products being imported into the country. Now, when you have that kind of problem within a value chain that is challenged like ours from an infrastructure perspective, it becomes very, very difficult for you to quickly deal with it, because what it means to deal with it is to truck out in very, very large volumes. You don't have the trucks. The trucks that you have they can't make Abuja in 3 days from Lagos. So you're really, really in trouble if anything happens within that space. So the space literally from an infrastructure perspective survives on a very, very difficult assumption that things don't really go wrong. And that's why when very small things go wrong, you feel the impact for a very, very long period of time, because we don't have the right capacity to deal with these kind of challenges. That's number one. Number two is the big elephant of subsidy. Mm-hmm. I don't know if to call it subsidy these days or to call it under recovery. But it's a challenge because to the extent that the government regulates what you get as a business, it's difficult. Efficiency becomes very difficult for you, because no matter what you do, the government caps or the government limits what exactly is the commercial advantage you can get within the space. Because of that cap, there's been a dearth of investment within that space. A lot of players have been unable to make investments because you can't raise the right financing, because banks look at you and they feel that you are regulated. You are working within a regulated space that the ability for you to enhance value, to increase your margins, to drive efficiency, to improve your bottom line significantly is very, very, very limited because the government puts you in a bucket, more or less, or puts you in a box. So obviously that subsidy or that under recovery, whichever word you choose to use, impact infrastructure because
most definitely.
Exactly, because it now becomes a vicious circle. And then the third thing is technology, right? We still use very, very old technology within the space. I mean, if you travel out of the country, the retail, the downstream infrastructure, the downstream technology has moved far ahead of Nigeria, and that continues to be a challenge. It continues to be a challenge in terms of driving efficiency within your business. It continues to be a challenge in terms of putting in place very, very workable loyalty programs because these things rely on technology for deployment. And for me, if you ask me for the three biggest challenges within that space, I'll take government perspective with respect to subsidy. That's the under recovery conversation. Infrastructure, and then technology. And obviously technology is part of infrastructure. So the three of them are kind of linked, more or less.
Yeah, Moshood, I think you touched on one of my pain points really when you talked about that contaminated fuel.
Yes.
Right, because I still ask myself, right, I even wanted to call into a radio show one time, and now that I have you as an insider, right, how did that happen? Because from a look test, right, I think once we see it, at the first test, I don't need to be a professional. And once I see it, I know this is not fuel. Like, how did that happen?
So it's not that easy, right? So what happens is that when products are brought into the country, the regulators require a test on the product before the product is discharged into storage tanks. Now, the test includes some parameters, right? However, the particular parameter that would have picked this contamination, right, is not included in our standard testing for products.
Wow.
Right? So that is what happened. Now, the Nigerian spec for PMS is known by everybody, right? So, but when the product comes into the country, there's a test that is done that includes parameters that are set by the regulator. Now, these particular products that are contaminated, the contamination is in respect of parameters that are not tested normally. That's how the product got into the country. So that's how the product got into our tanks, right? Because if the contamination had been in respect of one of the parameters that are ordinarily tested, then obviously the product would have been treated as off-spec, right? So that's what happened. Now, when you say from a look perspective, right? That look that you saw at the station, right? And the videos that you saw
on social media.
Yes, that's not the look when the product was delivered. So it's a progressive deterioration, right? So even from a look perspective, we would not have picked it when the product was being pumped into tanks, right? So it happened subsequently. So it's not like we're all idiots that we saw a black liquid and we still didn't say anything. So that's basically what happened.
Yeah, because I said that. If there's anybody that has been damaged, there'll be question as who will pay for the damage.
So there is a framework by the government to pay for the damage, but obviously, as with all government policies around this, there's need to ensure that there's no fraud in that process. So we need to be sure that there are actual losses, and what are those losses? They need to be proved. So that those administrative processes might even prevent you from
in Nigeria.
Yes.
Thank you for that insight, Moshood. Very, very insightful. Right. So I think looking at the challenges that you highlighted, right, I think thinking through it while you were speaking, I'm tempted to think that it's all doom and gloom. Right. So what would you think could be the turning point for the sector, in essence, to kind of attract investment necessary for upscaling, replacement of the steel infrastructure, and also trying to address some of the technology problems that you highlighted?
I think, like I said earlier, it's the big elephant in the room. It's this subsidy conversation, and whether you call it subsidy or you call it under recovery. Now, from a pure commercial perspective, there's nobody you speak to, right? I think we're all aligned in the industry. Operators, regulators, onlookers, analysts like yourselves, professional service firms like yourselves, we're all agreed that the government can't continue with under recovery. They can't continue with subsidy. Even the government agrees with it, right? However, it becomes a political conversation. It becomes a what do we do for the masses conversation. It becomes a how do we manage inflation conversation, right? So for me, I think unless we find a solution to this under recovery, right, the industry is not going to turn around much. Now, is it all doom and gloom? I don't think so. If it was all doom and gloom, I think we'd have closed shop, right? There must still be some money to be made for us to remain in business.
Why are you looking so good?
So I mean, there's still some money to be made, but if you're thinking about a holistic turnaround of this space, there has to be a conversation around under recovery. From the government's perspective, the government can't afford it. It's very simple. The government can't afford it. It's very, straightforward. I read in the newspapers yesterday that there's potential to raise debt to pay subsidy, right? So it's counterintuitive, right? So you would see that, it doesn't pass the smell test that we continue to subsidize PMS. So I think that the removal of subsidy or the dealing with subsidy, right, whichever way the government chooses to deal with it, will go a long way making this sector more commercially viable. It will encourage investment in this sector. And it's not really, really impossible, right? So kerosene was what we thought was the most difficult product to deregulate. Kerosene has been deregulated for years now, and we're all alive. AGO is deregulated as diesel, right? Mm-hmm. It's completely deregulated. Jet fuel is completely deregulated. So PMS is the last item on the long list of items that were originally regulated. And it almost seems like everyone is bleeding and everybody knows everybody is bleeding. So it's just a matter of time. I believe that we'll all come back and address this very, very big elephant in the room, because I don't see, particularly in 2022, I don't even know how the government plans to deal with this challenge. The landing price of PMS today, that's petrol, it's at least double what is being sold at the pump. So at the very minimum, right, it's double what is being sold at the pump. So it means that for every liter of petrol that you buy, the government is subsidizing it by 165 naira. So think about it. We consume, depending on who you ask, we consume between 35 and 50 million liters of PMS every day, right? Depending on the data points that you're picking. Let's stick with the lower end of the data points, 35 million. Multiply 35 million by 165 naira. That's what the government is literally throwing at petrol every day. In a country where we don't have enough funding to fund capital projects, we don't have, it's impossible.
Yeah, I think Moshood, you make some very, very good points. But I think I want to advocate for the layman. I don't know if I'm qualified to advocate for the layman, but they say Nigeria is the poverty capital of the world. And I want you to also advocate for, as an independent person now,
yes,
right? Do you think an average Nigerian can pay a cost-reflective price for PMS?
What is average Nigerian paying today? And are you saying the average Nigerian poor man that you're talking about is the guy that drives a car, right? There's several questions that are embedded in the question you have asked, right? Most economic decisions are not based on silver bullets. They're based on pros and cons, right? So you will never come to a decision, an economic decision, that is good for everyone every time, right? You would have to always think of the circumstances that you found yourself in. What are the pros and cons of the decision that you're about to make, and what is best in the interest of most of Nigerians? I am very, very confident, and I'm not saying this because I'm an industry participant. I'm very, very confident that removing subsidy or removing under recovery, whichever word you choose to use for it, is in the best interest of most Nigerians, right? Including those people you call the poor in Nigeria. Because I don't believe those are the guys that are driving the cars that are enjoying the subsidy the most. The guys that are enjoying the subsidy the most are you and I, because we drive, you have a car, your wife has a car, you take your kids to school. You are the one that is enjoying the subsidy the most, not the guy on the street, right? So my view is that the government can raise money from petrol, not pour money into petrol. It's more or less you're subsidizing consumption, right? If you are talking about, and I'm obviously by no chance advocating for this, but if you are talking about government subsidizing bread, like it's done in a country, I can have a conversation with you about that. But petrol is not largely consumed by the people you call the poor people. By the way, when they say poor, I think the index relates to living less than $1 a day, right?
Yeah, around that.
Exactly. Those are not the guys buying petrol. For sure, those are not the guys buying petrol, because petrol is a third of $1 right now. So, yes. And 1 liter is useless to you, right? So 2-3 liters, you're already at $1. So we're not talking about those guys. Those are not the guys that are being subsidized by the government right now. So when people bring up the argument of how do you expect the lay guy on the streets to buy petrol when you remove subsidy, what I say to them is that actually they were never buying. They're not the ones buying. We've always been subsidizing the rich guys like you.
How about the small scale businesses that depend on a better pass my labor generator and things like that? Because they as well fall into the argument. So
this is the exact argument people make about electricity tariffs, right? And the thing about demand and supply and economics generally is that you still pay that price, right? Whether you see it or not, right? So you don't want to pay a cost-reflective tariff for electricity, for example, but you still buy a generator, right? And you buy petrol in that generator, and you service that generator.
247.
And you have my friend who is a mechanic that is constantly collecting salary from you for not fixing your generator properly. So by the time you add your total cost of consumption, right, you will find out that it would have been better if you just agreed for the grid to provide 24-hour power supply at a cost-reflective tariff.
This grid is collapsing.
Exactly. And that was the next point I was going to go to. That you then make the argument that how am I sure that if I pay a cost-reflective price, I'm going to get value for what I'm getting? Yeah. But yes, unfortunately, it has to be chicken. It has to be chicken before the egg, right? You can say that maybe this chicken will not lay 5 eggs, right? But if you don't have the chicken at all, you actually cannot even get to egg laying part of it, right? I think that unfortunately we are at that point in Nigeria where we have to just figure out how to get the chicken. And when we get the chicken, we can then think of how to make sure we feed the chicken very well, and then the chicken lays the right type and size of eggs. But if you keep saying, oh, this chicken might not lay the egg, and because of that, you don't raise the chicken at all, you'll never get the egg. So I see the logic in the arguments you're trying to articulate, but my view is that at the end of the day, we pay more when we don't pay cost reflective.
Indirectly.
Yes, when we are not cost reflective, we pay more indirectly.
Yeah. So I think just moving on to the solutions now, I think we've spoken a lot about problems here and the subsidy, right? And the PIA, right, understands that there is a problem around the pricing of PMS, right? And it has been legislated in the Act that the prices of petroleum products must be cost reflective, right? How has the industry received the PIA in itself and the potential application of this provision or non-application of this provision of the law by the federal government?
I mean, I think as an industry, and obviously it will be very funny of me to try to speak for the industry, right? I can only speak for myself and what I know. But my view is that legislation by their very nature are means to an end. They're not an end in themselves. So the PIA is by no means perfect, but it's a step in the right direction, right? So was the industry very excited that the PIA was finally passed? Yes. Did the PIA achieve most of the aspirations of the industry? I would say no. But it's a journey, right? At least now we have a template. The government can go back and amend the PIA, and we can continue to amend just the same way we've been amending our constitution. So it's a journey. I think the biggest point for the downstream space in the PIA is the subsidy removal provision. And unfortunately, that is now the part of the PIA that is going to be suspended, right? I kind of understand the politics, right?
Months.
Yeah, I kind of understand the politics. 18 months is very convenient. That's when the next president gets sworn in. So the reason for the suspension and the logic of the suspension is clear in the length of the suspension that is being proposed, right? So, and I kind of get it, right? We're going into an election and nobody wants to be labeled as the black sheep or the enemy of the masses, right? I don't know what that solution is because I'm not a politician, right? But I think we're just kicking the can down the way. Now, whether we're going to survive to 18 months, right, economically, because we would always be Nigeria. I believe that Nigeria would always be Nigeria, right?
Sure.
But whether we will be in this same shape or we will be badly battered in 18 months because of the way prices have gone is something that we'll wait to see. But it's going to be very, very challenging for the government to hold on to subsidy for the next 18 months in the current shape. I guess there are a lot of options they have. They can increase the price without still making it cost reflective. So, for example, I said the price of PMS has probably doubled. They can move the price a little bit up and then reduce the extent of the subsidy that is being paid. There are a couple of levers they can pull, but keeping it in its current form for 18 months, I think will be very challenging.
I think you made reference to the electricity sector. I also understood that the federal government indirectly removed the subsidy on the electricity tariff without letting the consumers know.
I'm not very current as to the legislation within that space, but I know that my tariff has gone up, right? In my house, at least I can speak for what I pay. I know what I pay per kilowatt hour has gone up. Do I think it's a step in the right direction? Absolutely, right? Am I getting value for it yet? Maybe not. Right?
So that kind of contradicts, that chicken and the egg situation that
you're not going to get the chicken on day one and get the egg on day one. I don't believe so. I think you're going to get the chicken for some time and then get the egg, right? But if you don't allow the chicken to grow, you will not get the egg. So buying the chicken alone is not enough. Yeah. You have to nurture the chicken.
So I think, just to understand you clearly, right, and I think it does make sense, right, that the chicken has to come before the egg, and there will be some painful periods, right, when you're nurturing the chicken and getting the chicken in the right shape to lay the appropriate eggs.
Correct.
And I think that's something that Nigerians and our listeners, right, should take on board as well, going forward. I think, lastly, right, and just looking at it from an investment standpoint, because I think that's one way and the only way in which this industry can grow, right, is how do we see the private sector and the regulator, because it's a highly regulated industry, how do we expect these two major stakeholders to come together, work together to achieve an environment that is favorable to all, including the consumers and the Nigerian people?
I think communication and trust. We have to continue to talk. We have to continue to explore. I have to trust that you have the best interest of the industry at heart. You have to trust that I have the best interest of the industry at heart, and we need to continue talking. The objectives of the regulators are very clear and they are noble. So you cannot say that protecting the common man on the street is not a noble objective. You cannot say that
it is.
Ensuring health, safety, and protection of the environment is not a noble objective. So all those objectives, I have to understand them as an industry player that they are noble objectives, and the moderate commercial aspirations of the private sector players must also be understood by the government. Commercial players are in it for commercial rewards, and obviously there are other aspirations that go with commercial reward, but if you make it completely impossible for me to turn a return on a business, then you're killing the viability.
Thank you, Moshood, for your time today. And I think before we let you go, just want to find out if you have any final words.
None. I think I've covered most of the answers I have to your question. So nothing more to say.
So thank you again, Moshood. And I think we can just summarize by just speaking to some of the insights that came from the conversation, right? How lack of infrastructure is a major challenge. The PIA was an initial, was the positives were initially received by the industry, right? But the suspension of the cost-reflective price for PMS by 18 months is something that government needs to still look at, right? And I would say that continue cordial, the open line of communications, right, between
private sector and
the regulators is key to moving the industry forward. Thank you again, Moshood, for your time.
Thanks a lot, Babatunde, and like I said, good to see you again.
Same here.